money that was going between Florida and Washington, D.C. A former CIA agent had an account in Florida, had a bank account in Florida, and that's where the money was identified, going back and forth between that individual's bank account. Excuse me. So once this was put in place, you had a number of acts that came into place after the Bank Secrecy Act. So there were a number of them. You had the Money Laundering Control Act, and I'm not going to go through those because these are very easy to figure out. Anti-Drug Abuse Act, uh, on down to the USA Patriot Act, which is an acronym. Anybody that knows what this acronym is all about, it's uniting and strengthening America by providing appropriate tools required to intercept and obstruct terrorism. And moving forward, you know, understanding that credit unions and banks, your financial institutions, they are the front line of defense. The government cannot see what you're doing. Okay, they cannot see what's going on within your members' accounts. So you play a very important role in helping to identify and use activity and minimizing that criminal activity that these criminals are here conducting. Okay, so we come up with our first quiz. Now, those of you who are having the CPE credits, you have to make sure that you are answering all of these questions. So our first quiz. All right. Which president signed the Bank Secrecy Act into law? Was it A, John F. Kennedy, B, Lyndon B. Johnson, C, Richard Nixon, or D, Gerald Ford? You've got 30 seconds, I do believe.
10 seconds remaining. Andre, you should see the results of the quiz on your screen.
I'm not seeing anything. But the correct answer is C, Richard M. Nixon. I know everybody got that one right. All right, let's talk about money laundering. What is money laundering? It is simply just criminal finance. Anyone, any individual who conducts a financial transaction knowing that the property that they got the funds from is illegal. It's been proceeds of a crime, drug sales, gun sales, human smuggling, whatever the case might be, and they do something to try to hide it, pass it through the financial services industry to where it comes out clean on the other side. They're laundering the money. They are actually money laundering. It's just simple, okay? It's the process, it's an illegal process of when you take dirty money, put it into the financial services industry to where it moves through and comes out the other side and looks clean. Okay? Anything that can generate an asset, it can be tax evasion, phony record keeping, you name it. All these things are involved when it comes to money laundering. There's also reverse money laundering, where the funds that come into your credit union, the funds that members deposit in there are clean money. Could be their paycheck, could be the sale of property, could be selling cars, whatever the case might be. The money is clean. It comes from a legitimate source. But then that member, being that they may be a criminal, takes those funds out and uses them to support criminal enterprise. A prime example was the former governor of New York, Eliot Spitzer. He was pulling money out to support a prostitution scandal. So yeah, it's very difficult to identify these things, but in his case, the activity on his account was not normal. Okay, he was pulling out a lot of money, using it for prostitution. But what are the main things you think about when you hear the words money laundering? You think of the drug trafficking. There's tax evasion. These things that just when you hear the word money laundering, it just say, hey, somebody's running drugs, or somebody's not paying taxes, or maybe even terrorist activity. But there's so many other things involved in money laundering. You have human trafficking, elder abuse. These things all are involved in money laundering. And the ways to launder the money, you must deposit it into the financial services industry. You can't launder it. You can't put it under your mattress. You can't bury it in the ground. That's not going to launder the money. You must deposit it into the financial services industry by means of wire transfers. You got the business fronts, fictitious identities, offshore transactions. These things must take place to launder the funds. Without that, you can't launder it. Oh, we've got another quiz. These quizzes pop up quick. I wonder who did this. Don't blame me, okay? Blame the quiz maker, not me. All right. The Bank Secrecy Act passed the House on May 25th, 1970. B, October 26th, 1970. C, January 2nd, 1970. D, November 9th, 1970. When did it actually pass the House? Not when was it approved. When did it pass the House?
20 seconds remaining. All right, all responses have been received.
And the answer is A, May 25th, 1970. Okay, moving forward. There's so many ways that money can be laundered, so many different ways. And the criminals, believe me, they know every last one of them. They study them. They probably created most of them themselves. You got structuring where you're breaking up the large deposit to avoid any type of reporting. Bulk cash smuggling. A lot of times the bulk cash smuggling will start in some of your offshore transactions where they might be using the Cayman Islands accounts, Swiss bank accounts, whatever the case might be. And the reason offshore transactions are so very easy to use because a lot of your banks in those areas, they have very weak controls in place. So it's easier to move cash. So you got your cash intensive business, with gas stations and bars and what have you, where a lot of cash, goes through. You got your trade-based industry, where they're either underpricing or overpricing certain products. Very expensive artwork was a good market for that area at one point. You got your shell companies, you don't even know who the true owners of these things are, or if they even exist. There's really no active business in them. Your bank capture, and that's where the criminals control the bank. And a lot of times that would be even may involve someone just working in the bank. All right, and their controls are somewhat weakened by the individuals that work in the bank and help out with the money laundering. And of course, casinos. When chips are purchased, they're purchased with bad money. That illegal cash. Use a little bit of gambling, cash out, and leave. This is how they do. But anyway, three stages of money laundering. The first stage is placement. This is when the dirty money is placed into the institutions, and it could be broken up. It could start with the offshore transactions where the controls are weak, and then moved into various areas within the United States, of different banks and financial institutions. So the money is then broken up and moved around to where they get it into the financial services industry, and that's your first stage, your placement stage. Then you got your layering stage, and again, layering is moving the money around, falsifying records, falsifying accounting records, and moving it from place to place, making it look like it's in one place when actually the money is someplace else. So they're moving the money around, and they're moving it in a manner to where it's actually not even noticed. And then you have your integration stage. Now the money by this point is clean, and that's when the money is taken back out and moved back into the industry, whereas they're purchasing homes, starting a business, and the money is then used again to create more funds. So this is a link that shows a lot of different red flags that can resemble various types of money laundering. Okay, here's another quiz. And sometimes I wonder if I even know the answers to these questions, but I'm quite sure all of you do. How many additional acts were introduced following the 1970 signing of the BSA, or the Bank Secrecy Act? How many additional acts were introduced? If you remember, one of them was the USA Patriot Act, the Anti-Money Laundering Act. So how many of the acts were introduced then at that point?
30
You know,
seconds.
two, A2, B4, C7, or D9?
20 seconds remaining. 5 seconds. All responses have been received.
Okay. And the answer is 7. C7 is the correct answer. All right, now we get ready to get into a little bit of work here. All that other stuff is okay, but now let's start talking about compliance. All right, and that's what this is all about. So you understand Bank Secrecy Act, some things, why things are put into place. Just a quick recap, they started out with tax evasion laws and Bank Secrecy Act. Things need to be done in various ways that to launder money. Let's now talk about compliance. This is where we really get into the nitty gritty. There are 5 pillars, 5 critical elements. Training. Everybody must receive training. Designated individual responsible for your program. A system of internal controls to ensure compliance. Risk-based ongoing customer due diligence. BSA is risk-based as it is. And independent testing. These are the 5 critical pillars when it comes to the Bank Secrecy Act. Comes to training, all appropriate personnel must be trained. Everybody in the credit union. BSA touches every single part of your credit union. All departments BSA will touch. Everybody needs to be trained in the BSA. Some of the training can be tailored. There's training for tellers. There's training for loan officers. There's even training for collectors to identify certain things. So yes, everybody must be trained. And the BSA staff, they must receive more training than anybody else because they must understand all the departments and how things affect all the departments, everything within the credit union. They must know everything. Board of directors, their main thing is to be able to understand regulations, understand the policy, what needs to go into the policy, understand the credit union's risk. They have to provide oversight for the BSA program. The board must approve your policy. And they must make sure that, all the resources are available so that staff can do their job. The individual responsible is designated by the board of directors, hired by the credit union, but designated by the board of directors should be in your policy. That person's designation should be in your policy and in the board minutes that the board designated that individual to be the BSA officer. They must know everything about the BSA, everything about the credit union, all related products and services, all the risks. They must understand everything about the credit union and be able to report any needs or any violations or any findings to the board of directors. You got the first part of your BSA program is your risk assessment. Once that BSA officer is in place, you must have a BSA risk assessment. Okay, it is just a written, presentation identifying the risk that your credit union has when it comes to the Bank Secrecy Act, and not just the risk of money laundering, but the risk of non-compliance. You have to understand the various parts of this, right? Everybody should see this, all right? The risk assessment should include everything: products and services, customers and entities, okay, geographic locations. You must make sure that you understand all these things, because some of your products and services might carry a little higher risk than others. And not every credit union has the same level of risk within their products and services. For example, if you're into shared branching network, some credit unions had a problem with shared branching network because of the level of fraud that existed. Other credit unions may not have had that level of risk. If you're having remote deposit capture, that can be a high risk with some credit unions and maybe not with others. So your credit union has going to have its own fingerprint when it comes to risk. Not every credit union has the same thing. Customers and entities. Some of your memberships can be a high level of risk. If you have members that are constantly going into various areas where there's a high level of risk for money laundering in these areas, you can have a high level of risk against your customers or even some of your business. Some businesses are a higher level of risk if you got marijuana related business. These things must be identified. And then geographic locations. Are you in a high intensity drug trafficking area or a high intensity financial crimes area? Where your members located? So these things must pay attention to some of these things. And another quiz. These quizzes pop up quicker, you know. And I'm actually knowing some of the answers. All right, what is the second stage of money laundering? What is the second stage of money laundering? Is it integration, structuring, layering, or placement? A, integration, B, structuring, C, layering, or D, placement? What is the second stage of money laundering?
30 seconds. 10 seconds. All right, all responses have been received.
And the answer is C, layering. Remember, place was the first stage, then layering, the integration. Somebody stuck structuring in there. I didn't know that was a part. But anyway, I guess that was just to probably try to throw you off a little bit. But I know everybody got that one right. But some of the examples of products and services, especially when you're looking at maybe higher risk areas, which would be like electronic funds payment services, electronic banking, trust and asset management, foreign correspondent accounts, remote deposit capture. Like I mentioned, some credit unions have a higher level of risk, in these areas. So these are just some of the examples of product and service that can be a little higher level of risk. Some of your examples of your customers and entities, foreign financial institutions. If your credit union is holding any accounts with foreign financial institutions, non-bank financial institutions, insurance firms, pawn shops, these are some of your businesses that can be a high level of risk. You know, and even your personal service providers, such as attorneys, accountants, doctors, they can be a little higher level of risk depending on the type of business that they're in. And keeping in mind is that there can be a lot of money involved in these type of services, and your members can be bored. If you sit back and think about it, Al Capone, okay, he had doctors, he had lawyers. I think they would probably be high risk because they happened to taking care of removing bullets from people and representing criminals in court. So what do you say about that? Some of your geographic locations, countries that have OFAC sanctions. And like I mentioned before, you got high intensity drug trafficking area, you know, and that's not necessarily where your credit union is located. Where are your members conducting transactions? Your credit union can be in an area where drugs don't even exist. Matter of fact, people have never even heard about drugs. But you can have 25 to 35% of your members living and conducting a large volume of transactions in the state of Florida, which is a high intensity drug trafficking area. So yes, you have a level of risk in high intensity drug trafficking areas. So this is what you're identifying with your risk assessment. You're going to identify volumes and frequency, dollar amounts. The higher the dollar amount, the higher level of risk. Are your wire transfers? Are you international wire transfers or just domestic? International wire transfers have a higher level of risk. Okay, you're looking at concentration accounts. Where money is flowing through it. Some of them can be used like as a funnel account. If you have, if you document transfers, documented transfers where, your long-term members, these transactions are conducted constantly. They're consistent in what they do versus somebody that does transfers, especially overseas transfers, that sporadic, never the same amount, never know when they're going to take place. That could be a higher level of risk for some type of money laundering. Okay. So now you're going to analyze, once you've done all this, once you've identified all these areas, you're going to analyze, the areas of risk. Your higher level of risk, you're going to put steps in place to mitigate these risks. This is where your policies and your procedures are going to come into place. So you're going to maybe, put limits or dollar amounts or some type of restrictions. You might even just cut a service out completely because for example, some companies, they have actually gotten out of the shared branching network because the risk was just too high. And normally that was a risk of fraud. So these are things that you're going to look at when you're looking at mitigating the risk. As far as when you want to readdress your risk assessment, it used to be every 12 to 18 months. Well, no, now what they're looking at is as long as you are looking at your risk assessment when there are changes. If you have a merger or if you have an increase in certain products or services or certain types of transactions, big increase. You know, you take on a new service, take on a new product or service, going to have to readdress that to make sure that is either high or low level of risk. So, look at the FFIC examination manual. It gives you all the information that you need, and it also tells you what the examiner is going to look at when they come into your credit union. Other areas of high risk, you got money service business, probate and estate management. These are certain high level, and just like marijuana related, if your credit union has marijuana related business accounts, that is a high level of risk. Although you make a lot of money on those type of accounts, but that is a high level of risk, mainly because that marijuana is still illegal on the federal level. So we have to make sure that that's in place. And another quiz. I think they just tested my knowledge here. Okay, the credit union's BSA officer is designated by who? Is it designated by the CEO, board of directors, senior management, or the credit union's HR department? Who designates the credit union's BSA officer?
30 seconds. 10 seconds. All right, responses have been received.
And the answer is B, the board of directors. I really like Crystal's countdown there, letting you know you've got 10 seconds left to answer this question. Thank you so much for that, Crystal.
No
And
problem.
moving forward, internal controls. Now, we've talked about, things that need to be put in place with the BSA officer and things like that. But let's talk about these internal controls. This is where you're looking at trying to get things, in place. Policies, procedures. They have to be put in place. Customer identification, transaction monitoring, CTR and SAR reporting, OFAC requirements, 314A and 314B requirements. FinCEN and OFAC, they both carry pretty big guns. We're going to talk about these record keeping requirements, testing, independent testing, and internal testing. That internal testing is something that a lot of credit unions don't hear about, but I'm going to give you a little idea on that, something that really helps out. And you must take, I know we're all overwhelmed. We got a lot of stuff to do. We're all very busy. But when you start talking about this testing stuff, it is really helpful, especially when it comes to right before your examinations, right? And of course, training. Okay. So these are all of your internal controls that's put in place. It's talking about policies, procedures, and processes. I always get asked the question, what's the difference between procedures and processes? Well, they're both pretty much the same. They overlap, but policies, procedures, and processes understand these things must be written. You must update your policy annually. Even if there are no changes in the Bank Secrecy Act, staff should be reviewing that BSA policy and presenting it to the board of directors to be approved by the board every single year. It is required that the board approves that policy every single year. You must date the policy as you approve it, and board members must make sure that it is in their board minutes that that policy was reviewed by the board and approved that date. Okay, make sure we have that. Your BSA policy I mean, it should match your credit union. Make sure it matches the risk level because your BSA risk assessment is written and developed to identify levels of risk in your credit union for any type of money laundering. Okay, and also again, I mentioned risk of non-compliance, and I'll tell you something about that a little bit later. But that program, that risk assessment is made to identify the risk. Your policy and procedures and processes are put in place to help reduce that risk or mitigate that risk. Believe me, one thing you're not going to eliminate it. There's always going to be risk, and things are going to happen. The criminals are smart. They know, and some of the criminals probably used to work in the financial services industry. So yes, make sure you understand that your policy and your procedures must match your risk assessment and must be commensurate with your credit union, the size and complexity of your credit union. The customer identification program. All right? This program is put in place to say how you identify your members. If I come to join your credit union, I give you my name. I say, my name is Andre Lucas. What do you need from me to prove that I am who I say I am? All right, now, does it mean you have to go through an all-out investigation to try to make sure and confirm that I'm who I am? Look here, identifications can be fraudulent, you know, and they can look so good, you can't tell. The thing is to make sure that you have done enough to where you are comfortable with who I say I am. All right. You've done enough. You feel you've gone through enough identification process. Do you require a government issued photo ID? It must be part of your policy. Do you require two different identifications? It must be in your policy. So what does your BSA AML program tell you when it comes to identifying individuals that join your credit union? Do you have to have a form of photo ID? There's also that non-documentary type of identification where you can use check systems, credit reports, former employers, former accounts. Look, verifying references. There are various things that you can get to be able to identify the individual or feel that this person is being honest by saying who they are. But it must be in your policy to make sure that you following the guidelines that are set by your credit union, and you're doing the steps that you need to do to identify the individuals that are trying to join your credit union. Okay. Of course, you must also be able to identify whether or not these individuals are on a government list that you're not supposed to be doing business with. So make sure that your policy is very specific as to what needs to be done for an individual to join your credit union when they come in to say, hey, I want to be a member. So what identification process do you need to use at your credit union? There's a customer notice or member notice that must be provided every time your members come in to join the credit union. They must see this notice and it must be posted in your lobby, and this notice must be posted at every single spot where a member can open up an account or complete a membership application. If your members can join online, you must make sure that they can see this information before they proceed to complete that application online. They cannot miss it. You must make sure you're providing that. This is a sample little plaque that you can set up all around the credit union, and wherever members can open up an account, make sure that little plaque is sitting there. And there's the language that should be on your website when your members join your credit union through means of going online to join your credit union. So this must be in place everywhere they can move in, and you can move it around. Just make sure that when the examiner's there, you got one in every spot. Don't think you could look at one and move it to the next spot. No, that doesn't work. Somebody tried that before. It doesn't happen. All right. So member identification is also part of that is your member due diligence. And what you're looking here is when a member joins your credit union, you know, what type of information are you getting from this individual to maybe get an idea of what type of products and services this member might be using? Because a lot of your membership applications, they have little boxes to check, say, well, I'm going to be doing wire transfers or ACH, debit card, whatever the case might be. So you want to get an idea of what type of product or service or activity this member might be doing. As far as the volume of activity, that will come with the history as after the member has opened the account. So you want to make sure that you're getting some type of idea so that you can monitor the activity and you know exactly how this member is going to be working within your credit union. Very critical information. So, expected services. Some of these services might be a high risk. If that's the case, you might wind up having a high risk member. So what type of services this member going to be using? So if you identify shared branching and the members as a high risk for your company, the member says, well, I'm going to be using shared branching. Okay, well, guess what? Mobile banking, overdraft protection things, various credit lines. What type of services is this member going to be conducting or using at my credit union with one of our services? Are any of them high risk? I might want to know that information. Because, and as far as, how much due diligence you want to do on that, it could depend on the type of account, especially if the member is going to be opening up business accounts or the member's account might be in another area of the country or even another area in the world. So you want to have an idea of what's going on because this member gives you a foreign address that they're living in. They just happen to be visiting here. Then you want to make sure that wherever they are, that is not a high risk area as well. If it is, then you're looking at this member in a geographic location that's high risk. If it's a business account, you want to know things. What is the purpose of the account? What is the member going to be using the account for? And these are questions you can even ask this person. You want to look at financial statements. Get references. Where is the business organized? Is the business organized in the United States, or is this business organized in a foreign country? Is it overseas somewhere? In the trade area, know your members, know your members' customers. Where are they conducting business when the account is in place? So, your constituents. We talk about high intensity drug trafficking area. The business can be in Topeka, Kansas, all right, but most of their business is in Florida. Or most of their business is in another drug trafficking area. So you want to know these things. The type of business. Is it a marijuana related business? Is it an ATM company? Okay, keeping in mind some of your ATM companies are money transmitters. They're MSBs, especially if it's a Bitcoin ATM. All right, so be careful which type of companies that you're opening up. All right, and also identify who has control of the organization. Another quiz. Okay, you're going to earn your CPE credits today. Believe me, you're going to earn that. Who approves the credit union's BSA policy? Who approves the credit union's BSA policy? Is it the supervisory committee? Is it the board of directors? Does the BSA officer or the senior management? approve the BSA policy? So who approves the credit union's BSA policy?
30 seconds. Ten seconds. Responses have been received.
Okay, and the answer is B, the board of directors. Remember, the board of directors reviews the credit union's BSA policy, must be done every single year. So staff must review, update the policy, and present it to the board every single year for approval. And again, it should be in the credit union's board minutes. Now, there is a due diligence requirement for those who have business accounts. So this is the customer due diligence requirements for financial institutions. Goes all the way back to, we had to start complying back in 2018. What this is, you have to make sure that you can rely on your members to be honest and complete certain forms that you have to retain within your credit union. All right. And that is identifying the beneficial owner. If you have business accounts in your credit union, you must make sure that you are identifying the beneficial owner. There are two parts of doing that. You can either, if the person owns 25%, if it's an individual person owns 25% or more of the company, then they are considered a beneficial owner. And there's a control prong. Whoever is in control of the organization or management over the entire organization, executive officer, whatever the case might be, they are considered a beneficial owner. Now, if you have an account that's being opened at your credit union, you might have four individuals. Your business account's being opened, you got four individuals on this account. All of them own 25% of the business. Then they are all listed as beneficial owners. You might have one person that owns 50%, one person owns 25%, and then it's the other 25%. But you got two individuals that are considered the beneficial owner. All right. You may have one person on the account that owns 25%, and the other person on the account don't own any of it. The other ownership is elsewhere, but not on your account. Then that one person is listed as the beneficial owner of that particular account. You must make sure that the information, this is the appendix to get certificate that must be completed by your member. The credit union must retain this information. Another thing, even if you do not house business accounts at your credit union, you still must have the beneficial ownership piece in your policy. Mainly because it is part of the custom identification process, which is required to be part of your policy. So you must have requirements in your policy for the beneficial ownership of business accounts. All right. But you can also mention that your credit union does not house business accounts. Must have that in place. Now, FinCEN has gone back and forth a few times with this. At one point, they were going to have all companies report their beneficial owners directly to FinCEN. And this is the reason you're housing this information, all right? Because this is information for FinCEN. But at one time, FinCEN was going to have all institutions, all companies report their beneficial ownership information directly to them. That did not happen. Things were changed, and then it turned out that they were just going to have foreign entities report to them. Any type of foreign institution will report directly to them. So, but domestic companies do not have to report directly to FinCEN, only foreign companies. This does not change anything with the credit union, though. So, credit unions, you will still have to conduct your beneficial ownership requirements and make sure that you are recording this information and retaining this information within your credit union for beneficial owners. This is what's covered by the rule. Okay, so legal entities created in this country, corporations, limited liabilities, limited partnerships, these are covered by the rule. Any other entity created by a filing with a state office or any similar entities, keep in mind, formed under the laws of a non-U.S. jurisdiction. So these are ones that are covered by the rule. You must make sure that you are following the beneficial ownership rule and recording information and retaining that information within your credit union. All right. if you got somebody that has a little landscaping company, solar partnerships, 501c nonprofit organizations, or your phase 1C TR exemptions, you do not have to comply. They are not covered by the rules. So you have to worry about looking at their beneficial owners. All right. So these things are okay. It takes a lot of weight off you when it comes to those. But there's certain things to consider when you do open business accounts. Okay, you know, you got complex business structures. All right, when you're looking at these business accounts to make sure that you identify the beneficial owner. Okay, and then there's also when it comes to your customer identification, when you open these accounts, your customer identification process is exactly the same as regular member accounts when you're looking at the individuals that are on those business accounts. But keeping in mind that even though those individuals are signed on those accounts, they are not your members. The business is the member of the credit union. These individuals are just those who manage the account, and they're part of the business and possibly the beneficial owner. Because those individuals can change. Somebody gets fired, leaves the company, whatever the case might be, they're going to come off the account. We would hope that the other parties take them off the account along with the company, but they will come off the account and then be replaced by maybe somebody else. So make sure that you understand the customer identification process when it comes to these business accounts. And you got some additional procedures when it comes to opening up new accounts or your business accounts. The OFAC, 50% OFAC rule, specific activity monitoring, when it comes to business accounts, that's probably going to be somewhat enhanced. And your staff has to be trained. Make sure that staff understands how these business accounts operate, how they work, and what rules apply when it comes to these business accounts. And again, your regulators, you know, and we do know that a lot of times examiners may come in and some of them might have their own ideas how things should work. Okay, so like make sure that you understand how that happens. Just to touch on that 50% OFAC rule, okay? What it is you do not have to block when you're talking about a business account. All right, that 50% rule means, all right, if I've got one person that owns 25% of the company, and that person happens to be on the OFAC list, all right, it's only 25%. So I don't have to block the account. All right, but if I've got 50% or more of the ownership of that account or on that account, that's on the OFAC list, then I do have to block that account. But that's where it comes back into um, that complex business structures because if you got business A owns business C, and then business C is part of business D, then you can have 50% on the OPEC list between two of the entities, and then one other entity could wind up being the one that could be blocked. It's a lot of complex structures there, so make sure that you understand those things there. Okay, we're here in front of another quiz. I want to make sure everybody knows what's going on here. How often must the credit union's BSA policy be reviewed and approved? How often must the credit union's BSA policy be reviewed and approved? Annually, when the credit union's risk profile changes, before each NCU examination, or only when there are changes in the regulation. So, how often must the credit union's
30
BSA
seconds.
policy be approved?
15 seconds. 5 seconds. Responses have been received.
And the answer is annually. Annually. Remember, every year your BSA policy must be approved by the board of directors. Transaction monitoring. Very key component because if the criminals are conducting transactions in your credit union and you can't identify them, then we can have a little problem here. It can make things very hot for your credit union. You want to make sure that you can do these things. You should have policies and procedures in place, that say how you monitor, your currency transactions or any other type of transaction that come through your credit union. You got to monitor for suspicious activity, all types, and be able to identify what type of transaction it is. Depending on the size and complexity of your credit union, it could be manual reporting, data processing systems, however you do it, or it can be an automated system. All right. So, or like they say a combination of both, depending on how, the size and complexity of your credit union. So you want to make sure that you're able to identify any and all transactions that come to your credit union. Is it cash? Is it a check? Is it a loan payment? Even identify, loans when loans are being generated. All this stuff should come up in your monitoring system. Wire transfers, ACH transactions, whatever type of transaction can be conducted at your credit union, ATM, you know, uh, remote deposit capture, and that, like I said, not only see the transaction but identify what type of transaction it is. Without being able to identify the transaction, we're gonna have a problem on our hands. So you want to make sure: is it cash? Is it check? Is it wire? Is it ACH? You see, is it Bitcoin? What is it? If your members are using Bitcoin, is it involved in gambling? Is it involved in anything else? What are we looking at? Does it involve human trafficking? Human trafficking is a big business. Especially when we mentioned before, talking about when you heard me mention the term funnel accounts, okay, where you might see money placed into an account right in the state of Maryland. You might, $75,000, $100,000 deposited into an account in here in the state of Maryland. Within a few minutes, somebody in California withdrew the funds. What were those funds for? You know, it was is it involving human trafficking, human smuggling? What is this all about? So we want to make sure that we are able to identify these type of transactions and what they are. So when you're looking at the main objectives for human trafficking is forced labor, sex worker, organ trade. When you're talking about human trafficking, these things do take place, and and you can see that in some states it's even more so than others. You know the difference between human trafficking and human smuggling. All right, one of the main differences is consent. All right. Where if you're smuggling of immigrants, whatever, from one country to another, they have agreed, they consent to be moved from one place to another. Okay. So this is what they do. They consent, hey, help me move from this country to this country or wherever I'm trying to go. When it comes to human trafficking, on the other hand, there is no consent. All right. There's no consent whatsoever. They have been captured, they have been coerced, they have been drugged, they're now involved in abusive actions and whatever that the traffickers want to do with them. So there's no consent at all there. Exploitation is another difference. With smuggling, boom. Once they get to wherever they're going, they let loose. Goodbye. See you later. I get paid. I'm moving on, my merry way. There's traffickers. They're exploited. They're held prisoner. They're held captive. They use to generate profit for the traffickers. So this another difference is exploitation. Then transnationality. Smuggling normally is transnational from one country to another. Whereas when it comes to trafficking, no, that's right here. They'll snatch them off. They'll snatch them out of their homes. They capture young people that have run away from home. So and they are held, but it's taken right here in the United States. So it doesn't have to go overseas. Years ago, there used to be some, they were brought in from overseas, but in this case, no, it's right here within this country. So you got red flags for the trafficker. If you see a lot of taxi transportation transactions within an individual's account, ATM transactions, you know, very in example. How many of us, I know I don't, I'm quite sure people do, but how many of us hit the ATM machine at 1, 2, 3 o'clock in the morning? You see, and back in the day, when I was, 20, 25 years old or whatever, and I was hanging out a lot, maybe, but no, I don't think I'm going to be doing that now. Especially, who knows if it's safe doing that. Hotel spending. And a lot of your hotel staff, especially some of your major hotels, you go to Las Vegas, whatever, some of these hotels, a lot of your hotel staff are trained to identify possible trafficking uh, situations. And what they'll do, they'll just report it to the local authorities. All right. So we need to be able to look at our transaction monitoring systems and be able to identify what could possibly be illegal activity as far as spending in hotels and taxi cabs, and different things like that, shopping at pharmacies or whatever, a lot of transactions taking place at the pharmacy. So these things can help identify what type of activity is going on, and if the activity is illegal and might be, worth reporting. So when it comes to forced labor, is the activity consistent, with the actual profile of the account? Then you got the various different email addresses and things that emails might not be, to a certain address. You got some internet escorts services that could be involved. So these type of things that you want to make sure that you'll be able to identify when it comes to human trafficking, human smuggling. Where credit cards are being used, where debit cards are being used. These type of things that can take place when it comes to certain things. Organ trade is a real. It's not as constant, or you don't see it quite as often, but it can happen, So when you've got a lot of medical stuff going on there with transactions, between different foundations or association, medical tourism companies, these things can take place. And if you see these things taking place and the activity is not normal activity and there's no business reason and it's not a business account, or the case might be, you might want to take a look into that. I have heard of one institution was a credit union that was further out west that actually identified, and it was led to a organ trade situation there. So these things they do happen, but that's the only time I've ever heard of it. So, but if you ever spot something like this in your credit union, you might want to take a look at it. That's a link that you can look at to help identify, various types of human trafficking and what have you. So you might want to just take a look at that. You can see what that is. Okay, we've got another quiz. Let's see what this quiz is going to be all about. All right. What is the difference between human trafficking and human smuggling? What is the difference between human trafficking and human smuggling? Is it A, consent, B, exploitation, C, transnationally, or all the above?
25 seconds. 5 seconds. Responses have been received.
And the answer is D, all of the above. All of the above is the correct answer for that. So I'm quite sure everybody got that one correct. All right, transaction reporting. Wow. This is what also takes place after, which you cannot report transactions without having monitoring systems in place. And by the way, one thing that I should have mentioned when it came to your monitoring systems, if you have an automated monitoring system, okay, those systems, there's a requirement, and NCUA's been asking for this for a little while. Those systems are required to be validated. So your system validation needs to take place. Now, there has not been anything that says how often or the frequency of your validation. Personally, myself, my thought process on that would be almost like your risk assessment. When you have major changes, okay, an increase in volume or the various levels of risk, to make sure that your validation of your system is still reporting properly and looking at various scenarios and being able to identify and provide you with the flags or the alerts needed to know that you need to investigate certain transactions within your credit union. So that system validation has been required from NCA for a few years now. So make sure that you are getting your validation done. It's not a cheap process, but there are different levels that you can do. Of course, the cost will vary between the levels. So depending on the level of risk, it's very important that you do have that risk assessment in place, and your risk assessment is very accurate, and that can help you determine which level of validation that you might want to get for your system. But you must have your automated system validated. And even your manual, if you're still using a manual process, you want to make sure that you're doing some type of testing with that to make sure that that's giving you the information you need to be able to identify any type of transaction that should be reported to the federal government. Because some of the biggest penalties and enforcement actions involve when the reporting is not complete, when you've missed transactions that should be reported. Those are very serious violations. You want to make sure that your monitoring system that you have in place are being validated and that they are doing the job that needs to be done to make sure that your credit union is protected and you're being able to see all the illegal action that's taking place in your credit that might need to be reported. So it's very critical that you're doing that. All right. So when we're talking about reporting, all right, and one of the reports that we file is called the CTR, the Currency Transaction Report. And we all are pretty much aware of this one here. When you're talking about cash transactions it must exceed $10,000. It must be cash transactions that exceed $10,000, not money orders, not checks, not wires, not ACH. Cash transactions that members deposit or withdraw total cash in or total cash out exceeding 10. It has to be $10,000 and 1 cent or more. Okay, so exceeding $10,000. It could be multiple transactions but at the same day, but you treat that as a single transaction if it's done in the same day. And also, if it's a deposit, if deposits are made, you going to assume that whoever's on the account is going to benefit from that deposit. So if it's a deposit greater than $10,000 in cash or currency, then everybody on that account is going to be listed on that CTR. If it's a withdrawal, and say, one person comes in, they withdraw $12,000, and you don't see anybody else with that individual. You don't see anybody waiting for them or anybody alongside them. As far as you're concerned, they are there alone. That is the individual that must be on the CTR. You can still put anybody else that's on the account on there, but you don't have to. But that individual must be on the CTR. Now, if it's me and I'm taking, you know, $12,000 out of my joint account, my wife better put her on there too, because believe me, she knows that money's coming out of there, and she's going to be the beneficiary of those funds. You have 15 days, all right, from the date of the transaction to file that CTR. Yeah. Some of your more modern systems, when that transaction takes place, they actually that system itself will populate the CTR, and it can be filed that very same day. I always recommend, file it immediately if you can. And all information, you retain it for 5 years from the date of the report. The day that you file it, you must retain that CTR for 5 years. Everything under the BSA, record retention requirements are 5 years. Everything under the BSA is 5 years. Now, we talked about CTR. CTR is a little more simple. Must file a CTR when it exceeds $10,000 total cash in, total cash out, any cash transaction, must file that CTR. All right, now, suspicious activity reporting, SARS, suspicious activity reporting. And when I ever see the initial SAR, SAR, the first thing comes to my mind, something ain't right. So I'm going to have to file a suspicious activity report whenever something ain't right. All right, so whenever you see something, or there's a violation, or somebody attempted to do something, you're going to file, a SAR with Treasury. Treasury's got their hands in all this, by the way. You heard me talk about policies, procedures, processes, and what have you. Okay, guess what? Your SAR filing procedures should be just as long as can be. How you identify unusual activity? That's part of your monitoring. Of course, how you identify. What do you use to identify the unusual activity? All right. Law enforcement inquiries. All of these things must be part of your SAR filing procedures. National security letters. You get one of those, you just do whatever it tells you to do. Of course, again, the transaction monitoring, SAR decision making and documenting. You know, who's making the decision to file the SARs? A while back, the NCUA was recommending that credit unions develop what's called a SAR review team. An odd number of individuals, at least three individuals, that would help make the decision to file a SAR. So it would not be left on just one person to always make that decision to file that SAR. Of course, if you're a much smaller shop, you might just have one person making that decision. but it's good to have more than one set of eyes looking at the activity to determine, okay, is this activity suspicious and should we be filing a SAR? There's also completing the narrative of the SAR, which identifies the activity that took place. Your SAR completion and your SAR filing, the timing of the SAR. And we're going to talk about that, the quality. Boards must be notified every month of how many SARs that were filed. And of course, the record retention requirements of SAR is 5 years, and then you've got the prohibition of SAR disclosure. But that's mainly saying is that the individual that the SAR was filed on, they cannot know that that SAR was filed. Very critical. They cannot know that that SAR was filed because if that individual has been under investigation for whatever reason, and then all of a sudden you let them know it leaks out that the SAR was filed on them, you could be destroying a long running investigation that would really put you in a little bit of trouble. Some of the reasons to file a SAR is one BSA structure, and that's breaking up that deposit to avoid the CTR filing, and they got check fraud and check kiting. When I saw that this was still a problem, because I'm looking at some of my credit unions, and they're telling me, yeah, we got, check fraud and check kiting. I said, check kiting, I thought, check 21 and all that just did away with the check kiting stuff, but apparently it didn't, computer intrusion, credit and debit card fraud, embezzlement, all these things can be reasons to file. So, and there's a whole lot more, individual walks in and asks a question, walks up to the teller, hey, look, if I deposit over $10,000, if I deposit $11,000, is there a certain form that has to be filed? And the teller, yes, well, I'll file a currency transaction report with the Treasury Department, let them know you deposited, 11,000 dollars. And the member then says, okay, well, here's $9,900. I'll deposit this amount. And that's suspicious. Okay, so are we going to file a SAR? Absolutely. They're trying to defraud that deposit. And talking about the tellers like that, we want to make sure, and credit unions don't do this. I'm not even worried about that. Credit unions just do not do things like this, but you cannot assist anyone. Somebody comes in and says, hey, if can give me some news. What can I do? What can I do? And you tell them, look, just don't deposit. Just make sure you deposit less than $10,000 in cash. Yeah, you don't want to assist anybody because if you're caught assisting, you're going to be walking out of there in handcuffs just like they will be at some point. So make sure you're not doing that, helping someone get by, trying to avoid CTR filing if somebody's coming into the credit union and they're needing assistance in getting funds put into the account and not being reported. You want to make sure you avoid that. But your SAR filing thresholds, if there's anybody within the credit union, anybody that works there, volunteer, board member, supervisor committee, if they conduct anything illegal, no matter what the dollar amount is, you want to file a SAR. It was a violation of the BSA. All right, somebody does something that a member does something violating the BSA, and the transaction amount aggregates $5,000 or more. It doesn't have to be a single transaction. It could be transactions over a period of time that aggregate $5,000 or more. You're going to file a SAR. Right? If it's criminal activity and you can identify the individual, that aggregate amount is still $5,000. If you cannot identify that criminal activity or the individual involved in it, then that dollar amount it goes to $25,000, and that will be the threshold where you must file a SAR $25,000. Now, the thresholds that are set, the $5,000 thresholds, can you file a SAR for a lesser amount? Absolutely. I had a credit union one time. Somebody was depositing fraudulent checks, but they were small dollar amounts. Some of them less than $1,000, and maybe $1,000 here. $800 there, $500. They were small, but they were fraudulent checks that they were running through the credit union. So I think they filed a SAR. It was somewhere around between $3,500 to $4,000. They filed a SAR because of the volume of checks that were coming through that were fraudulent. So they filed a SAR on that particular member. So we want to make sure you understand, you must file the SAR when it reaches a threshold. However, you can file a SAR for a lesser amount. You are protected by safe harbor. That would not be a problem. Okay. So how is your credit union set up? Depending on the size of your credit union, who actually receives a report of suspicious activity? Who is the one that's going to be filing the SAR? Which department? Which individual? Who does the activity took place at the teller line? Who does the teller report the activity to? the branch manager? Does the branch manager report it to the BSA department, whatever the case might be? So you want to make sure that you have the proper lines in place, reporting lines as to who gets the report of the activity that's taking place for the possible SAR filing. Once the activity has been identified, all right, that you identify the activity as suspicious, the date that you detect that activity being suspicious. So the activity could be taking place for about 3 months. All of a sudden, hey, you've gotten on September 30, you've identified, hey, this activity that we've been monitoring for a little while, for a month, maybe 2 months, 3 months, it appears suspicious and we need to file a SAR. So from the date that you detect that activity being suspicious, you have 30 days from that date to file your SAR. Okay. If the activity continues from that date, you're going to monitor that activity for 90 days. And at the end of that 90-day period, if the activity has been continuing, then you're going to file, you've got 30 days to file your continued SAR. So you monitor for 90 days. From the time you file that first SAR, 90 days later, the activity is still continuing. At that 90-day point, you've got 30 days from that point to file what's called your continued SAR. So in other words, your continued SAR is filed 120 days within 120 days after your first SAR. Okay? Sometimes that sounds a little bit confusing, but yes, file a SAR, your first SAR at one point when you detect it, you got 30 days to file it. From that date, you get monitored 90 days. At the end of the 90-day period, you got 30 days to file your continued SAR. So your continued SAR is filed 120 days after the initial SAR. You retain that reporting information for 5 years. I said BSA is 5-year reporting retention requirements. SAR filings are confidential. You cannot let the individual that the SAR was filing know that the SAR was filing. You want to be careful sharing your SARs. Your SARs can, you can share SARs when it comes to normal business, your audits, or what have you. Some boards, I've seen some boards that like to see SARs. Okay, we're the board of directors. Can you show SARs to the board? Absolutely. If they want to see them, I don't recommend it, but if the board wants to see the SARs, you can show the board the SARs. You can release them to the board to look at it, the board meeting, whatever the case might be. However, you must report SAR filings to the board annually. And normally, I don't recommend that you report any detailed information, such as names and so forth and so on. You at least report the number of SARs that were filed. And if you want, you might say what they were filed for the mortgage loan fraud or filed for kiting or whatever the case might be. If you want to report the activity, you can. Even sometimes that can be a little bit dangerous. The reason I say boards should not see SARs, I've got to report the number of SARs. I'm the BSL. I got to report the number of SARs to the board that were filed for the month of September. So I've got 5 SARs that were filed the month of September. When I get to the board meeting, I give the board 4 SARs to look at. And they say, okay, you said 5. I can only let you see 4. What does that tell you? Chances are somebody in that room has a SAR filed on it. So now you've opened up a can of worms. And the individual in that room is going to know it was them because they know what they did. So now they know that the SAR. That's why I do not recommend. If you do share SARs, let's go back to our risk assessment. Okay. If you decide to share SARs, this is what you're doing. You are increasing your level of risk for violating the prohibition of SAR disclosure. That needs to be part of your risk assessment. That comes to being non-compliance. So remember I said earlier, when you're talking about risk, what is your risk of money laundering? Was also what is your risk of non-compliance? Because when you start looking at some of your enforcement actions and penalties, you'll see that a lot of those were triggered because things were not in compliance. So the more you're not in compliance, the more that you will do something you have no business doing, or something might slip through the cracks, or some transaction might slip through the cracks, then you're looking at not being in compliance. So what is your level of risk of not being in compliance? If you're sharing SARs, you're increasing your level of risk of violating the prohibition of SAR disclosure with an individual that you should not let them know SARs filed on. They may find out. So let's make sure that we have these things in place. Oh, wow. And now we have another quiz. I love these quizzes now. I'm getting used to them. All right. The deadline to file a SAR for continued suspicious activity is how many calendar days after the date of the previous related SAR filing? The deadline to file a SAR for continued suspicious activity is how many calendar days after the date of the previously related SAR filing? So you filed your first SAR, is it 30, 60, 90, or 120?
20 seconds. 5 seconds. All responses have been received.
And your answer is 120 days. Remember, you file your initial SAR, 90-day investigation, plus 30 days to file your continued SAR. So the answer is 120 days. Enforcement agency and regulatory bodies. These are the ones that carry the big guns. These are the ones that really come after you. These are the ones that you should be afraid of. Office of Foreign Asset Control, OFAC. This is a division of Treasury. Okay, they administer sanctions against targeted countries and individuals, whoever people you should not be doing business with. Okay, so OFAC, Office of Finance Control, they carry big guns. All right, so their goal is to catch and identify, international narcotics traffickers and various agents that are doing things illegally in and out of this country. They just want to get rid of all of them. Now, OFAC is not BSA. However, OFAC must be a part of your overall BSA program. OFAC is not BSA though. There is no regulation that requires you to have an OFAC program in place, but you want to make sure you do. So now, OFAC focuses on, various trade sanctions, where BSA focuses on anti-money laundering, all right, and record keeping and reporting requirements, all right. So, but they both have the same goal. Their both goal is to try to eliminate this illegal activity, stop all the terrorist financing and what have you. So they both have the same goal, just different areas of that particular goal. So, but remember, like I said, OFAC is not BSA. OFAC and BSA are totally separate, but you must have both in place unless you want to be in a lot of trouble. So make sure that you have both of these in place. All right. Again, like I said, there's no regulation that requires you to have an OFAC program. There's a regulation that requires you to have a BSA program, but no regulation that requires you to have an OFAC program. However, if you do not comply with OFAC, everything you do when it comes to your transactions, you will be at risk. And you're looking at stiff penalties, you're looking at all types of trouble. You do not want that to happen to you. So you must have an OFAC program in place. Don't argue with your examiners to say we don't have to have another regulation. Okay, examiners, okay, fine. Next time I come here, I'm gonna ask you about the penalty that you got hit with because you didn't have an OFAC program in place. Your OFAC program, you should have a designated employee. It can be a BSA officer, okay? However, depending on the size and complexity of your credit union, you should have an OFAC officer, somebody that's responsible for OFAC. You should identify your high risk OFAC areas. Okay, so what is that saying? You should also have, you got a BSA risk assessment, you should also have an OFAC risk assessment as well, separate from your BSA. Including that, not only is your risk assessment, your OFAC policy should be separate from your BSA policy. You should have two policies. Remember, OFAC is not BSA, so BSA policy, OFAC policy, totally different, okay? Make sure you have all types of controls in place for your OFAC screening, independent testing. It's testing for your OFAC program. Now, your testing can be done in connection with your BSA audit, okay, where they'll look at OFAC as well. All right, since it is all one program, two different regulations here, okay? So you also must have training programs in place for OFAC. Make sure you have your OFAC training programs in place to train OFAC because OFAC is crazy, okay? When you're looking at your OFAC risk profile, what are you looking at? You have international funds transfers, and cross-border ACH transactions. You might say, no, we don't have any cross-border foreign ACH transactions. I'll ask you one question. Any of your members use PayPal? If your members use PayPal, guess what? You've got international ACH transactions. Okay, so you want to look at these things, concentration accounts, overseas branches or subsidiaries. Do you have members that travel overseas? They can be going into an OFAC sanctioned country. So what are your members doing? All right. Do you have business accounts? If you have business accounts and some of your business accounts have clients that they deal with overseas and funds coming in, whatever, make sure you know who your member is dealing with. That's called know your customer, know your member's member. So you must make sure that you're able to keep up with all these things. OFAC requirements. You have the specialty designated national list. We call it the SDN list. We call it the OFAC list. You call it whatever you want, but it's a specialty designated national list, your SDN list. Your credit union should be checking all new members, joint members, beneficiaries, fiduciaries. Anybody that's on that account should be checked against the OFAC list. Most systems do that at account opening. All right. Some even check beneficiaries now. So your systems have been set up to be able to do a number of things. So make sure all this is done at account opening. All right. Periodic database scrubs. Periodically, your entire database must scrub against the OPEC list. Your member may not have been on the list when they join the credit union, open their account. 6 months later, they have become criminals. They're in the OPEC list. They're being investigated. They're being monitored. Guess what? They're robbing banks. Anyway, you want to make sure that you have everything in place. Report positive matches. If you get a positive match, you have to block and freeze the account. Reject transactions. I'm sorry, but that $75,000 Cadillac loan that you made is going to go delinquent because you cannot take loan payments if that member has been identified as a positive match in the OPEC list. Sorry, it's going to happen. Watch your delinquency shoot through the roof on that one. You got record retention requirements to OPEC that have changed. It used to be 5 years along with BSA. Well, in March of this year, they changed that to 10 years. So everything must be retained when it comes to OFAC for 10 years now. Okay. So that also shows you OFAC and BSA are different. OFAC record retention requirements are now 10 years. BSA is 5 years. So your database scrubs, all the stuff that you're doing, you must retain that information for 10 years now when it comes to OFAC. Please make sure your OFAC policy is updated and it addresses the new 10-year record retention requirement for OFAC. OFAC requirements, you must report all blocking within 10 days after the account has been blocked. So you block an account, you got 10 days to report that. If you have a number of blocked accounts, you have to file an annual report. All accounts that are blocked as of June 30, you must report those today. Okay? That report should be going out today. Okay, so make sure that you're reporting all that, and a full record of transactions must be retained for at least 10 years. Okay, so make sure you're retaining all this information when it comes to OPAC. It is critical. Sanctions, and this is where training comes in for your OFAC officer. Whoever is in charge of OFAC, they must be trained highly when it comes to OFAC because sanctions they can be all over the map. They can change overnight. Okay, so you've got your comprehensive sanctions, you've got selective sanctions, you have transaction based sanctions where a certain transaction may not be able to be conducted in a particular country. You can have just a shipping port that has been sanctioned or a particular vessel that is sanctioned. You can have transactions that your members cannot conduct when they're overseas. You got members that are traveling overseas. So make sure that your OFAC officer is trained. They understand OFAC violations. They understand how sanctions operate. They understand how sanctions move. All right, because violations when it comes to OFAC are not cheap. They can cost you a lot of money. Oh, okay. I thought we had gone a while without a quiz. Here's another quiz. Which regulation requires a credit union to develop an OFAC program? Which regulation requires the credit union to develop an OFAC program? Is it the Bank Secrecy Act, USA Patriot Act, Money Laundering Suppression Act, or none of the above? Which one of these requires the credit union to develop an OFAC program?
30 seconds. 5 seconds. Responses have been received.
And the answer is D, none of the above. Remember, I said there's no regulation that requires you to have an OFAC program in place. But if you don't, oh, it's going to be trouble. It's going to be big trouble. All right. Automated clearinghouse, ACH. Not going to spend a whole lot of time here. Just a few things that I'm going to make sure that you understand and realize, you know, they can be, certain transactions when it comes through ACH can be, a high risk, especially if they're handled by a third party or international. So you want to make sure that you understand how these things work. So especially when it comes to third party. All right. So now when it comes to your risk, as far as especially when it comes to OFAC, domestic ACH transactions, you only have to be concerned with your member. Now, granted, your member is being monitored through the OFAC system. In some situations, some systems do it. They do it OFAC scrub daily. All right. So you want to make sure that your system is monitoring your members if it's for domestic. However, if it's across the border HH transaction, you must make sure that you're checking where it's coming from on the OFAC list. If you have a third party that's handling your OFAC screening for you, and they're screening your cross the border HH transactions, they must provide you with evidence that the transaction has been done for you to retain it. All right. If they're not giving you evidence of saying no match or whatever the case might be, you must conduct that OFAC check yourself. All right. You must be able to retain information. You must be able to retain evidence that the OFAC scrub was done, or the OFAC check was done on that particular transaction. It's one of the risks, some of the risks when it comes to ACH. Third-party service providers, if they're not conducting an OFAC, you're left out there hanging out to dry. So if you're relying on them to do your OFAC compliance, guess what? There's a problem there. So you want to make sure that you are conducting that if they're not providing you with evidence that it's been done. All right. Large dollar amounts of frequent ACH activity or international ACH activity on a particular account. A lot of times, as you know, when ACH transactions come in, they're identified by account number, not by name. So if you got one account that's got 2 or 3 ACH transactions coming in constantly, are these transactions legitimate? Where are they coming from? Who are they? And do they belong to that particular member? All right. So make sure that you're looking at that. Of course, your international ACH transactions, you're looking at high risk geographic areas where they're coming from. So we want to make sure that we're not, ignoring these things. And that activity, any activity that's not normal activity for an account or a business, should be considered somewhat questionable and be looked into to make sure that the activity should be coming into that particular account. So making sure that we are identifying all types of ACH activity that's coming into a particular account. Just to give you an example, there was a drug ring years ago where I guess you want to call it the kingpin or whoever he was, had an account that was being used for transactions, and individuals had their paychecks were going into various accounts and to different financial institutions. So it was uncovered that what was going on was, depending on the amount that went into the individual's account. All right, so my whole paycheck goes into an individual's account. That would determine how much I get in drugs to sell. And naturally, I've already built up my clientele as a drug dealer, or somebody out there selling drugs. Then so I know how much I'm going to get. So chances are my paycheck might have been $3,000, but when I finish selling these drugs, I've got between $7,000 and $8,000 in my pocket after I cut it up and spit it back. Don't ask me how I know this stuff, but anyway. So this is what was happening. So that was, unusual activity with all these accounts where somebody else's ACH transaction or their paycheck was going into, and this person was making big money. So these are the type of things that we have to make sure that we can identify if they are taking place within our credit union. And here's another quiz. The Bank Secrecy Act requires financial institutions to file a CTR if the cash transaction exceeds $10,000, the multiple same-day cash transactions exceed $10,000, a cash deposit exceeding $10,000 is made on behalf of the account holder, or D, all the above. See if you remember back that far in the presentation.
15 seconds.
Oh, we can depend on Crystal for that countdown. That's great. Get your answers in.
5 seconds remaining. Responses have been received.
And the answer is D, all of the above. So I'm quite sure everybody got that one right. CTRs, they've been around for a minute. All right, financial crimes enforcement network, FinCEN, another, the Division of Treasury, another one that carries the big guns. They're great. You know, FinCEN's got a great website. If you ever want to go to the website, it's got all the kind of information. Every now and then you got two parts. You got 314A, 314B. 314A is sharing information with the federal government for the sole purpose of fighting terrorism. So what happens is, every now and then you'll get law enforcement to send somebody's name over. They investigate somebody. They need FinCEN to check to see if they have any accounts anywhere. Okay, so the credit union should have a designated individual responsible for 314A. Two individuals, as a matter of fact, depending on the size and complexity, it could be up to maybe even four. All right. Two individuals that are responsible for 314A, 314A, I'm going to say real quick, it's highly confidential. There's a list. Only those individuals can see that list. So 314A, two 314A contact people must be designated. Their names are given to NCUA on the call report. NCUA sends those names to FinCEN, Financial Crimes Enforcement Network. Okay. So every 2 weeks or more often if necessary, it can be more often, but normally it'd be at least every 2 weeks, those individuals will receive an email. That email will tell them that the list of names has been put into the shared secured information sharing website. You go to pull the list down, scrub it against your database. If you have any positive matches, you have 14 days to report these matches, and that's all you do. You know other details, don't do anything else, but that is confidential. Only you and the other party is going to know about these things, okay? So nobody can review that list. All right. So some of the compliance violations: not downloading the list when you're supposed to, missing those dates, allowing, the core provider to use the list to search for others. There was a problem with that at one point, but you can now, they are allowing the core provider to take the list and do your search. They cannot use your list for somebody else's search. You cannot share access authorization with anybody else in your credit union. You cannot allow staff to view the 314A list, and you must update that 314A contact person when people leave or you're changing. So these are some of the major violations with 314A. So make sure that we're keeping these things in check. All right. And that is a confidential list. Oh, boy, these quizzes come up nice. I like these quizzes. All right. So, for instance, 314A search requests are required by the credit union to search accounts maintained during what period? Okay. I don't know if I mentioned it. It was on the slide. I may not have mentioned it, but we'll go through this: 90 days, 6 months, 12 months, or 24 months. I'm going to give you the answer for this one. It's 12 months. All right. Because I don't remember actually going over that part. So we're going to get that one right for you today. So 12 months is a period that you will look back as far as your 314A search. It was on the slide though.
It looks like all responses have been received for that, Andre. So I'm going to go
Okay,
ahead and end
let's
the.
go ahead and move on with it. And we know that the answer to that one, as I said, is C, 12 months. 314B is just another part of FinCEN, okay? This is sharing information with other financial institutions, okay? No big deal. You must register with FinCEN every year to be able to share information with other financial institutions. FinCEN loves it when you do that because you can share information which will help you determine if you need to file a SAR. You can't share SAR information, but you can share information to determine if you need to file a SAR. Your member might be conducting some illegal activity in your credit union, or you think it's suspicious. You know that they're dealing with another bank or credit union somewhere, so you can give them a call and have a talk with them about it. But you must make sure that you register, have a point of contact, have policies and procedures, because the sharing of information must be done in a highly confidential manner. highly secured manner. You cannot just use email. You can't use a carrier pigeon. Make sure that you take steps to make sure that you are sharing information in a confidential manner. So policies and procedures must be in place. You must also make sure that who you're sharing information with is also registered with FinCEN under 314B. FinCEN's website, they will give you a login where you can go to their website and verify whoever you're sharing information with to make sure that they are registered under 314B as well. Okay, some of the major violations when it comes to 314B, not keeping your registration updated. It's annual. You must annually register, not verifying the sharing party, not having policies and procedures put in place as far as your sharing process, and unsecured sharing process is another violation. Okay, enough of that. Independent testing. Your program, your BSA program must be tested. Now, independent testing, there's no frequency as how often it should be done. No statute that tells you this should be done every 6 months, every year, every 2 years, 3 years, whatever the case might be. However, all right, if you look in the BSA, AML, the FFIC examinations manual, it will tell you every 12 to 18 months, or if there are any significant changes to your risk level. Or if you've had an unsatisfactory BSA AML audit, you're not going to go 18 months before you have another one. Believe me. All right. Examiners will not allow that to happen, but make sure that you're doing it at least every 12 to 18 months. I recommend annually. Some of your third-party providers, they will do it annually for you, depending on who you use. So I recommend annually. They're going to evaluate your whole compliance program. Your testing is going to be risk-based, just like your program is risk-based. Making sure that all of your controls fit your credit union. Make sure everything is in place. Make sure that your controls are in compliance with whatever the regulation is. Thanks for example, the new 10-year record retention requirement for OFAC. Are your controls in place to make sure that this information has been retained for 10 years now and not still at the 5-year mark? So make sure all these things are in place. Must fit your credit union. Independent testing is important. You heard me mention earlier about internal testing. This is you helping yourself. Okay. Every so often, well, before I even go there, a lot of times the examiners will come in or your auditors will come in and they'll be reviewing things. They'll look at something and they want to look at your member accounts. All right. They want to look at your customer identification process. They want to make sure that you're retaining all information. You could have opened up 1,000 accounts in 1 month and they picked 15 accounts to look at. How in the world do they always find the one that was a problem? It's beside me. But being somebody that does BSA audits, it happens. They always seem to find the one that there's a problem with. Out of 1,000 accounts, there's only one, and they find that one. So what do? Internal testing. As employees of the credit union, as the BSA officer, or whoever you are, whatever position you're holding, occasionally just pull maybe a selected number of your member accounts, your new identification process. And just to make sure you check it yourself. Hey, okay, I reviewed these. We're looking at if you find an error, correct it. So are we doing these things? Your OFAC procedure process. Are you looking at that to make sure that the scrubs are being done? 314A procedures. Are you looking at, because you can go on FinCEN's website and you look at 314A. And for all the way back to the beginning of the previous year, they have a list of all the searches and the dates that the searches were sent out. Okay, they have the dates right there. Are you looking at that to make sure that you have captured each date and conducted your 314A search? Okay, they give that to you. Record retention requirements. Are you just testing them? Your BSA monitoring system. Are you having your system validated? Are you testing the manual system that you're using? You can do that in-house. So these things are things that you can do in-house just to help. It doesn't take a whole lot. It doesn't take long. Just spend a little bit of time, maybe once a quarter, pull some accounts. Look at your OFAC process. Look at 314A, making sure that you're getting all those dates. It's critical, that internal testing. And when the examiners come in, if you found something, a mistake in a certain thing, and you corrected it, you documented it, if the examiner comes in and pulls that and sees it, guess what they're going to say? Good job. You see? So you found a mistake, you corrected it, and you're moving forward. The examiner didn't find it. Oh, we've got another quiz. How often should the independent test of the credit union's BSA AML program be conducted? Is it annually, every 12 to 18 months, or when there's a significant change in the risk profile, when the credit union adds new products or services, or when a major changes are made to the credit union's BSA AML program and system?
30 seconds. Fifteen seconds. All responses have been received.
And the magic answer is every 12 to 18 months. If you remember me saying that was in the FFIC examinations manual, it's recommended every 12 to 18 months. Most common BSA violations, incomplete independent testing. That's common. It happens, unless you're on a strict program where you're getting it done all the time. Incomplete BSA and OFAC risk assessment. As you see, they're both separate, BSA and OFAC risk assessment. If they are not complete and they do not fit your credit union, what is your credit union doing overseas, whatever. So make sure you have members that are abroad, okay? No written or updated BSA or related policies or procedures. You're going to have written, but are they updated? Are they approved? Has the OFAC policy, has that date been, and their record retention time been changed? Failure to comply with your written policy. Quick example. As we know, the BSA, when we talked about the independent testing, every 12 to 18 months. I have gone into a credit union. I have done a BSA audit, and they were in compliance with the 12 to 18 months because there had been maybe 16 to 17 months since their last test. But their policy said annually. So they're not in compliance. If your policy says annually, you do it annually. Okay, so undocumented training or failure to train. And this is for everyone. If you got 60 employees and you got one employee that has not been trained, you're out of compliance. Make sure, and board members, please make sure that you get your BSA training. Incomplete CTRs and SAW processes, They get to download that 314A list. Remember I said you can go to FinCEN's website and see each date that list was downloaded to the Shared Secure Information website. So you can check that and make sure that you're on top of it. Improper OFAC process, no OFAC on new members. Make sure that we're getting these things done. Those are the most common BSA violations. Risk, there's a high risk when they're not in compliance, and if findings can affect your camera rating. Large monetary penalties can be assessed against credit union and against individuals, and even board members. They can be fined, cease and desist order. And not necessarily the whole credit union shut down. I've seen situations where certain things were shut down in the credit union. For example, one credit union, they did not, their customer identification program, the CFP program was not in compliance. Matter of fact, it was in pretty bad shape. So NCUA came in and they put a cease and desist order on opening new accounts. Can you imagine how that would affect your credit union where you can't open up new accounts? They can continue operating, loans, deposits, withdrawals, no problem. But they could not open any new accounts until they got their program in place. And also incarceration. And when you talk about going to jail, that's normally when somebody has stepped out to doing something on their own to have a gain, doing something illegal to create a gain. So if you're not, as long as you're not doing that, you're fine. But credit unions, we don't get involved in that. But yes, you can go to jail. Yeah, these are some of the penalties for non-compliance. Standard, negligence, $500. But check that, $10,000 per day for CTRs not filed within 15 days. That's pretty stiff. Okay, so you got 15 days to file a CTR. If you go 365 days, you didn't file a CTR. Yeah, multiply that by $10,000. One thing though, if you do run across a situation where CTR should have been filed and it was not filed, don't kick it under the rug. File a CTR. Conduct an investigation. You might, if you've got, a number of CTRs that went filed, conduct an investigation, find out why they were not filed, what happened? Was it an employee error? Was it your system error, the validation that was not conducted on your system and it did not show it? So conduct an investigation, find out why it was not done, document why it was not done, put measures in place to correct that to make sure it won't be done again, and file the CTRs with an explanation to FinCEN. Let them know what happened, but here they are. Make sure if you come on that you file them. Don't kick them under the rug. It looks worse. Intentional noncompliance with $100,000. These things can happen. So make sure that you're looking at these. International money laundering up to $1 million, you can go to jail, prison, whatever. But the cost of compliance is much less than the cost of non-compliance. Make sure that you understand it. If we know cost goes up, it's a lot of costs when it comes to compliance. If you need an automated monitoring system, they are expensive. Validation of your system, that's expensive. These things take place. Hiring personnel can be expensive as well. So the cost of compliance is less than the cost of non-compliance. Because when you run into non-compliance, it's in trouble. Oh, another quiz. Wow. I thought we were about through with quiz. How long must a credit union retain their records under the OFAC requirements? Oh, OFAC record requirements. Is it 5 years, 7 years, 10 years, or 15 years? OFAC record requirements. How long must you retain those records?
I think the quiz master might have missed this one, so we'll have to give this one to everyone as well.
Okay. Everybody knows the answer for that one is 10 years. No problem. Must be 10 years. It changed from 5 years to 10 years in March of this year. Okay. Just some penalties, just so you can take a look at some of these things here, December 12th. Okay, what happened here? Oh, went back. Okay. So, London Bank, total assets, they paid $1.9 billion. North Day Community Development Federal Credit Union. This was in 2014, but $300,000. They had an MSB, conducted $2 billion in transactions. All right. They did not have an effective ailment program in place. Remember when I said that risk of non-compliance? You don't have things in place, you're setting yourself up. This is how these things happen. Bethex Federal Credit Union, look at the size, $12.3 million. $500,000 sub money penalty. That was in 2016. I've got some recent ones in here too, so don't worry. These might be old, but they did not have a risk assessment conducted in 2011. You see, so these things, 2012 risk assessment did not assess MSB risk. Are you putting everything in your risk assessment? Okay. This is an individual. This individual made a decision to put a cap on the number of alerts that were coming out of their automated monitoring system because the system was sending out more alerts than what staff can handle. Okay, well, fine. Staff can't handle it. Hire more staff. He put a cap on the number of alerts. A lot of SARs were not filed. He was assessed as an individual $450,000. This is in 2020. Capital One, $390 million. Failure to file CTRs. Okay, SARs not filed. These things happen. All right. Community Bank 2021, $8 million civil money penalty. File special activity, failed to file special activity reports. These things do happen. $390 million. USAA Federal Savings Bank 2022. Wells Fargo was penalized, I think, probably every month. But anyway, $97.8 million, and this was in 2023. TD Bank, the largest penalty in history so far, $1.3 billion in 2024. If you remember, I talked before about weak controls. Having weak controls in place, this was a case of weak controls because they had employees in the bank conducting transactions or not reporting transactions properly. So yes, these are things that do happen. And when it comes to enforcement actions, you're going to be held liable. Whatever happens, you're going to admit responsibility because years ago they used to take settlements and settle and move on. Now, no, that's not going to happen. You admit responsibility. You're going to take you're going to take the hit. You're going to take the penalty, and you're going to make sure that you can try to continue moving forward. But FinCEN is not playing with you. Neither is OFAC. This is a policy statement. This should be part of your policy. This language should be in your policy. Okay. Understand this and all these bullet points are very important, but the one that I like the best is the second bullet point: managing and mitigating BSA deficiencies will not be compromised by revenue interest. Okay, but look at your BSA policy. Here's the language. Make sure it's in the early stages of your BSA policy somewhere in the beginning of the policy. That is a compliance culture. You want to make sure, and across the board, everything else, there should be a compliance culture when it comes to Reg Z, Reg D, any reg that's out there. Make sure you have a compliance culture and you're maintaining your level of compliance with your credit union because you can get penalized with any other department within the credit union outside of BSA. Okay, these are websites. Great information, a lot of information. The BSA examinations manual. That manual actually tells you what the examiners are going to be doing when they come in to review your BSA ailment program. Know exactly what it looks like. Know what they're looking at. This manual is great. You've got FinCEN, you've got Treasury, OFAC. All this information is great. They're very friendly websites, very easy to use. FinCEN, you can go on FinCEN's website and look at enforcement actions. You can see all the enforcement actions, and not just against banks and credit unions, casinos, other type of institutions that are required to comply with the Bank Secrecy Act. So yes, you can see all types of enforcement actions on FinCEN's website. And there is my information. If anybody has any questions, please feel free to ask me any questions. Because we got a few minutes left, Crystal, I do believe.
Yeah. Yes. If there aren't any questions, I'm gonna allow another minute or two. If you have a question, feel free to use the Q&A box. You may also raise your hand so that we can unmute you if you have a question for Andre. Let's see if there's anyone with a question. Don't see anything right now. As Andre mentioned, his contact information is here on the screen. You all will receive the slides as well as the recording from today. That will be sent to you end of day, early tomorrow morning. You all will receive notification of that. For any of you who did opt to receive a CPE certificate, that information will be provided to you by end of week. For those of you that just want a participation certificate, we will be working on that and we'll get that out to you all by the end of week as well. So if there aren't any other questions or concerns, we will go ahead and end today's Zoom. So thank you, Andre, for being here with us.
Thank you, Crystal.
Thank you.
Crystal is great, everybody. Just give Crystal credit for all this. I just sit here and do a lot of talking.
Thank you all.